Good evening, wizards, and welcome to episode 31 of the Crypto Wizard podcast. Now, it's Sunday evening, guys. It's been a great week so far. Great week for trading. We've had all kinds of different things going on in the market. We're finally seeing some movement. So it's only right we end the week on a very positive note. And that goes with another educational topic within the Wizard podcast. Now, a good thing that I've actually started to introduce before we really get into the nitty gritty and cover a topic that I absolutely love myself personally, we're going to just discuss what's actually going to be happening moving forward regarding the Wizard podcast. Now, guys, I've decided that although I normally give you guys the vote, it's very, generic. I want to give you guys more control. I want you guys to have the final say in what you want covered. At the end of the day, the platform is for you, so I'm here to listen to you. So no matter what I provide, at the end of the day, it's what you guys say goes. So in saying that, on Twitter from now on, whenever you see me or every Sunday, give you guys the option to choose the topic, just give a little retweet or like to some of the best replies you see that may agree with the topic you want. If you like the topic or you like the suggestion, give it a like or a retweet, and then that way I can go in there, see the most favored topics, and then that way convert it into a poll on the Wizard Telegram for you guys to then have the final say. So if I go over to the Telegram right now, it's looking amazing. I mean, we've got 900 votes in a matter of around 10 minutes. You guys have voted for when to cash out and the exit strategy. And again, we had the option of growing an account whilst managing bills. 45% voted for that, but 55% went in, almost 1,000 people straight away, for when to cash out and for an exit strategy. So that tells me off the bat, you guys want to know when to cash out. And actually, to be honest with you, it's probably more important than the initial investment itself. So it's a phenomenal topic that I'll be combining alongside the topic of sudden wealth syndrome, something that I technically have become a victim of myself in the very early stages of actually, generating wealth for myself and beginning to actually make real money in this very real world we live in. So putting that aside, before we actually begin, I just want to say as well, guys, it's only a few weeks left till the Wizard platform launch. And again, you can tell by my voice now, my voice is just getting more bouncy and more excited every single week because we have a very crazy and eventful October coming up. Not just Halloween, as much as I love Halloween, as much as I love the Harry Potter vibes, the Wizard platform is coming soon. So we're going to be dropping a lot of teasers very soon now, and it's coming to the point of launch. So it's time to actually start revealing the platform, showing you guys exactly what's going on. The cards have been held incredibly close to my chest, and believe me, it has not been easy. The team, we've been sitting here holding back everything we're looking at, and it's painful to know that only we can see this stuff right now. So just make sure, again, www.cryptowzrd.com, you guys have signed up, you've registered, because the people who have signed up to the email will be getting the teasers and the leaks first. That's simply how it always goes. So we will be providing many different reveals coming forward and many different exciting competitions and opportunities to be on board the Wizard community. So I'm just throwing that out there as well, guys. If you do not know, now you know, and just make sure you stay in tuned. Post notifications, there's going to be a crazy amount of competitions coming forward. So your competitions, you will need those post notifications on to obviously make sure you're one of the first ones there. Some of these may even be time sensitive. We are going for a full out launch, and we are going to change this industry forever. So in saying that, on this very positive note, the tweet in question that actually inspired this topic it literally said this: when to cash out. A lot of people aren't margin trading, some are hodlers and do not have a plan. An example would be, I have 50,000 XRP waiting for $10 to cash out 15%. Is that dumb, or should I take out a percentage at $5? We simpletons wonder these things. And again, instant reply, I agree, exit strategy would be great. So with saying that, let's jump in. What is the first thing we need to cover on this? Well, the first thing I actually want to cover is battling sudden wealth syndrome. Now, sudden wealth syndrome, I don't know if it's technically a real diagnosed symptom by any means necessary, but it's a very well-known saying and terminology within the trading and investment world. And if you go onto the Investopedia, it comes under the bracket of a name being given to adjustment problems afflicting individuals who suddenly come into large sums of money, such as those who win the lottery. Now, it says becoming suddenly wealthy can cause individual stress, and I completely agree. The sayings goes, more money, more problems. problems, and that absolutely is true. Many people think that, being wealthy or having a huge amount of money just means you live the rest of your life relaxed. But the truth is, it brings a whole different breed of problems into your life, a whole different breed of stresses and different individual causes and effects and all kinds of different things you never really anticipated. It's not, when you look externally at wealthy people from the surface level, all you see is glamour, glitz, you see the lifestyle, you see happiness, and you see people popping champagne left, right, center. But reality can often be a little bit different from that, to be honest with you. And I've dealt with that firsthand. I understand these topics in incredible depth because I've been there. I've been broke, I've been wealthy, I've seen all different sides of the, I guess you could say, the spectrum. I've been there, I've done that. So the first thing to really cover with sudden wealth syndrome is this is actually probably the biggest cause. And again, combining this with all the psychological implications of greed, sudden wealth syndrome is going to become very real very soon. Looking at the market right now, again, not too much of a market breakdown to go into. Bitcoin dominant, 66.8%. It's been a fairly good day in the market. We're seeing some growth. We're seeing some movement to the upside. The trades are moving in profit. That's great. But focusing on a longer term perspective here, what are we actually worried about? Why am I a bit concerned for some of you guys? And the truth is, some of you guys, and to be honest, the majority of you, especially if once this Wizard platform comes out, I'm going to do everything in my physical power to ensure you guys are achieving everything you desire. Now, if we're considering all of this and putting this all into perspective, that means a lot of you very soon will be falling into a very substantial amount of capital, which has been born through cryptocurrency investments. Now, it's happened to myself in the early days when Bitcoin started going to $1,000 at first. I didn't really know what to do with myself. I was a little bit scared, to be honest with you. And even when Ether came on the scene, even when I started making money, even when Ether, the amount of money that was made from that Ether investment, I don't really know what to do, to be honest with you. No matter how much I had my finances in order, you always have your finances in order for your current situation. And as much as you prepare and as much as you plan, nothing can really face you for the real thing. And this is where sudden wealth syndrome can really kick in and cause problems. And it's not a secret. I've covered this before. The majority of lottery winners, they end up broke. And this is not a lie. This is a proven fact. They end up broke because the truth is, guys, not everyone is born to be wealthy. Not everyone's destined for wealth. Not everyone's destined for riches. And the truth is, the people that are normally in fairly negative financial situations anyway, they're there because of their own decision making, their own thought process, their own management of money, their own risk management of life overall was not in line to actually allow them to have that kind of money. You're essentially the same I've said before, the same way you need a certain skill set before the skill set can pay. You need a certain skill set in actually understanding money and valuing money and managing money before you will ever have the capabilities to actually possess that money. You cannot expect to have, let's just say, a £10 million or $10 million portfolio with $100 mindset. And that's the problem with the majority of our generation. We're so used and so complacent to the money we're earning now that when everyone says, I'll win the lottery, I'll leave it in the bank, and I'll collect interest and I'll live a good life. The truth is, inflation is going to eat the living daylights out of that anyway. And that's why I've never really agreed with savings accounts. I've never been a fan of savings accounts. I've never agreed with that aspect of things. I agree with saving, but I do not necessarily agree with savings accounts. And there's a big difference, and that's a topic that will be covered somewhere in the near future. But let's go over to this right now, and let's just use a good example where I'll give you a bit of my own example very soon as well, and we'll just kind of cover how this inflicts with what could be going on moving forward. Now, when I say sudden wealth syndrome, I do not mean millions and billions. Not everyone is going to make millions or billions or even six figures. You may just make 5 figures or 4 figures or 3 figures, but this is all relevant to your own personal circumstances. It's very likely the people that have made several million had some form of starting capital that was fairly good and maybe better than the majority of people, but that may have been deemed through many sources or however you made that money. You may not have a wealthy family, or you may not have inheritance or any form of money, but if you've been saving hard, you can still invest a lot of money into crypto. And that means you're increasing your odds of actually achieving 6 figures or more. So even if you have, let's just say, $10,000 to invest, if that ends up turning into $3 million from cryptocurrency holdings over a span of 5 to 10 years, that essentially still is sudden wealth syndrome, because you've gone from what was once known to you as a 4-5 figure threshold of understanding with wealth. You've now gone to potentially 6-7 figures in a matter of weeks, months, years, whatever it may be. It's faster than what you would have attained through any other means of investment, to be honest with you. We know that cryptocurrency is one of the fastest ways to make and lose money right now. It's very volatile, it's very fast, but it does provide a much larger reward in comparison to the majority of other investment vehicles or asset classes. So it's looking pretty good. And it's looking pretty promising if you're invested in this space. Inevitably, at some point in the near future, you are going to be seeing money you have not seen before. No matter if that is 3 to 8 figures, 9 figures, whatever that is, there is something called sudden wealth syndrome, and it applies to every single one of us. And it's happened to me in the early days. The problem was, in my head, I always knew I would be wealthy to some extent. I always, no matter what, well, it depends what wealthy is to each individual, but I knew what I deemed as wealthy, and I knew what I needed to be at that caliber, and I knew what it would take, and I knew essentially how much that would be in my head. So even before I had money, even before I had really anything to my name, I still had this ideology in my head. I had an understanding. I have notebooks scrabbled away for literally 4 or 5 years ago, maybe even 6-7 years ago, where I'm writing down investment strategies on what I would do with $1 million, what I would do with 5 million. And all of this is noted down. And this is someone who had less than, 4 figures to their name, essentially planning a 6, 7, 8 figure portfolio in their head when they didn't even have the money there. But this is why it always starts with a vision. It always starts with a dream, and it's something from the very beginning. If you're not prepared for it from the early stages, you're never going to achieve it. Now, you may not believe in frequencies, you may not believe in energy, you may not believe in manifestation and law of attraction, but I truly believe, with the mindset I had from a very early age and even preparing myself for it, I was almost preparing myself in advance for something that I knew would come my way. And I essentially attracted that to myself by projecting it and manifesting it and just focusing on that every single day. It's the same way if you focused every single day on what you would do if you had this, that, and you're working towards this, that, it's very likely going to come your way. It's the same as any skill set or any other form of materialistic item or anything that's even deemed a currency. It could be Yu-Gi-Oh cards or Pokemon cards. If you've planned in your head that in 5 years' time you want to be the king of all Pokemon card holders, and you have a strategy for how you're going to manage your investments in Pokemon cards, then you're very likely going to become that person if you stay fixated on that goal. It goes for all aspects of life. But the truth is, when the wealth actually comes, and a good example was when I made the first few 6 figures on Bitcoin, and then we started pushing through to the 6-7 figures on Ether. That's when things really started shaking up for me. And not to mention 2017, no matter how much money I had from cryptocurrency investments prior, when 2017 came, even myself personally, I was a bit shaken up. Even me, myself and my team, all of us were making, millions across the board, guys. I'm not even joking. Blockfolios were flying up so fast, I thought we were being hacked. Like, I wanted to just message Blockfolio and be like, is this a scam? What's going on here? And it was just scary. It was scary to see that much money coming so fast, because when you actually experience sudden wealth syndrome, it's not that it's scary and you think you're going to lose it, but a lot of questions start running on your mind. And this is where it starts trickling down, because the emotional aspect of sudden wealth syndrome can directly impact your cashing out strategy, your exit strategy. Where do you take profits? The same way I'm trying to teach you guys patience during margin trading, the absolute same can be said for long-term investments. And if you actually think about it, when it comes to margin trading, many people enter positions early, they exit early, they do not hold the trade the whole way, they take profits too early, or maybe they leave it running for too long. There are so many different factors and strategies that you really need to be clamping down on. There are so many things to take into consideration. It can be overwhelming for a newcomer investor, and even for an expert or a seasoned veteran in investing, it gets very complicated and very tense. No matter how hard your plan is, or how good your plan is, or how solid it is, when it comes to real life situations, when it comes to that actual moment where things are getting interesting, your rationality can fly out the window. And understanding in advance what may happen and how to prepare for this better can really leave you a lot more profitable than you expect. Because believe me, if you do let sudden wealth syndrome victimize you and take over, you are going to be very unfortunate in how much profit you're actually extracting from this market. And the same goes for myself. Even though With Forex, I was saving money. I was living a very modest lifestyle. I was not going beyond my means. I was only spending profits. If that was profits from Forex or my stock investments or wherever it may be, I was only really spending profit. So even if I had a bit of money, as I started getting older and as BTC started going higher and higher, what essentially was happening was, as I started seeing these numbers of 50,000, 100,000, 200,000, 300,000, a million, 2 million, 3 million, as this number started getting higher and higher, I became a bit intimidated of my own wealth. I was almost scared because I'd never seen this money in my life. I'd worked my whole life. It's been my dream. I achieved this. It's everyone's dream to achieve that form of wealth to some aspect. And when I actually saw that money come in off my own hard work, off my own back, that I actually, no matter how fast you make money from cryptocurrency, you can say you got lucky, you can say this happened or this happened. But at the end of the day, if you are taking the risk of allocating your capital towards a certain investment and you achieve a reward from that investment, you can only thank yourself for making that decision. It wasn't luck. It was, even if you just put the money in there, you've taken that rational decision to risk your hard-earned capital in return for some form of reward. And I didn't necessarily know how big that reward was going to be, and it caught me by surprise at how much was actually formulated from this. And to be honest with you, the first thing that ran through my head was, shall I just sell everything now, and why wait for 1 million? Why not just take 100,000? I've never seen this in my life. My family will be happy. I've achieved the goal. That's technically successful for someone at such a young age, of a very, very young age, sub 20 years old. We're talking 16, 17, 18 at these ages, starting to see a huge amount of money start flying in. It was a bit scary, to be honest with you, and it's not something that many people can really prepare themselves for. And the first thing I thought was, I showed my dad, I showed my mum, and they go, well, cash out, sell. And that's a very old school mindset, isn't it? It's sell. But at the same time, you've got the old school mindset where it says just keep holding. Greed consumes humanity. We are greedy human beings. It's embedded within our genetical makeup, and it's something that not many people can actually understand to break free from. It's something I've fortunately never suffered from. I've never been greedy. I've never envied other people. I've never really cared what other people do. I've always believed in a free world, a free life. We're all free to do what we want. We're all free to have our own decisions, our own ideas. We're all free to be who we are destined to be. I've never cared if someone has more money than me or if someone has other possessions. I've never cared. And I think that's obviously down to maybe parenting and how I've been brought up, because we're a family that hasn't really cared too much about money. And my parents in particular, as much as everyone loves money, my parents have never cared for it. So I guess that embedded down to me from a young age, that even though I wanted it, I've never held a significant value to money. I've never valued money over my family or siblings or, anything, or even friends. I do not care for it in that way. And that's essentially one of the most powerful ways anyway to actually start possessing money and to actually start accumulating wealth. The less you care about this thing, the more it comes into your life in abundance. So when this started coming through, when the money started coming in, you're conflicted because you do not know whether to sell straight away and, just take what you've made. At the end of the day, if you've never seen £500,000 and then £500,000 is there in a heartbeat, you're obviously battling with yourself. You're conflicted because you think, well, hold on, if it's gone to 500,000, why not just leave it to 1 million? Then I'm a millionaire. But then at the same time, your head's telling you, well, hold on, you've held all this way. The investments will always turn around at some point. Should I be taking some profits off the table? And this is something that can be haunting. It can be scary and it can be frightening because every single crucial second counts. It's the same way when it comes to margin trading. Your trade could be in $1,000 profit or £1,000 profit. And let's just say you're targeting $10,000 BTC and you've got $1,000 profit when it's at $9,500. You're now conflicted. Do I hold it to $10,000 BTC and make a little bit more money, or do I simply just cash out now? And this is where the exit strategies are almost identical even when it comes to margin trading. Because let's just say I'm targeting $10,000 on a long position for BTC and I entered at $8,400 like right now. Let's say we've gone to $9,500. You're in a position where if you go to $1,000 profit and it pulls back a few $100, then you've potentially lost a few $100. And in your head, you start thinking, well, guess what? I'll just sell now then because I don't want to lose another $100. I had $1,000 profit. Now I'm at $700 profit. What if it falls to $300? And the same goes for your actual physical portfolio. And that's why one of the most crucial things to do during the investment stages in particular, before you're cashing out, is to just not look at your portfolio unless you're accumulating consistently and calculating your holdings, do not worry about your balance. Do not worry about how much money you have, because when you're watching that blockfolio, for example, 24/7 fluctuate, it affects you mentally and it causes you to make crazy decisions that you never would normally make. So that's one of the best things I could say, first of all, for combating sudden wealth syndrome, is disregarding your portfolio, because when you become so fixated on those moving numbers, eventually you start to ingrain a certain threshold in your head of what you are satisfied with taking. And then let's just say your portfolio hits $7 million one day and you're just holding it there and holding it there. If that portfolio never returns to $7 million, you may never sell ever again. It may be $5 million, but your brain, and even if you're saying to yourself right now, no, I wouldn't do that, I can promise you everything I told myself I wouldn't do before I saw money, I did end up doing, because many people cannot prepare for it. And luckily I did not go spiraling out of control, but I promise you, you will break your own rules and regulations and protocols that you give yourself when the money actually comes in. And it's very frightening, because you're suddenly opened into a world where, let's be honest, without money we are restricted heavily. In some parts of the world, you're not able to actually get sufficient healthcare. You're not able to buy healthy food. You're not able to even get clean food or clean water, and it can limit you in everything you do. But then I've seen firsthand what can happen with money, and it blows you away, because suddenly every single thing you want in the world, it's there. It's at arm's reach, it's distant, it's attainable. And let's just say you go on holiday, and I've experienced it firsthand, guys, where you suddenly do not care anymore, and it can become very scary when no matter what you do or whatever the consequence is, you very quickly realize money can solve it. There's been times where Airbnbs have come to thousands and thousands and thousands of pounds in fees, and you do not care. You brush it off, you pay for it. And it can be very dangerous if you fall into that mindset as well. So it can really affect you no matter what happens in the world. Having a very large influx of cash or capital or wealth, whatever it may be, in whatever form it may be, it can negatively affect you. And it's in your best interest to understand how to combat that. So in answering the question as well, of obviously, let's just say you have $10 waiting to cash out 15%. The truth is as well, you have to be realistic and you have to have a long-term mindset. For me personally, I set myself certain thresholds, and we will use XRP as a great example for this, because the majority of my wealth is within XRP in terms of cryptocurrency wealth, that is. So with the majority being in XRP and the majority being from a very early stage of investment, the first thing I've said to myself with cryptos is I'm going to be holding this for at least 5 years from the point of the 2017 bull run. It wasn't 5 years from the point I actually initially bought it, from 2010, 2011, a bit of BTC. I actually said to myself from then, I'm going to hold that for a very long time anyway. Then after we saw the 2017 bull run and I saw the amount of capital coming in, I saw the speculative drive that actually caused this growth, I realized that if we're seeing this now without institutional growth and we're seeing this without regulation, then I can only imagine what this market is going to achieve in a matter of a decade. And yes, I'm saying a decade. And this is the problem. The millennial mindset. Millennials right now are a laughing stock. I do not like millennials one bit, brutally honest. Very weird, very strange. I'm not sure what's happened in the universe, whatever frequency has shifted or whatever planes or panels or whatever is going on in this infrastructure of a world and universe we live in. Something went wrong with millennials massively, and I'm not sure why, but you get the point. They're a bit weird and I don't really understand why. So looking at millennials as a good example, they're very, I guess you could say, optimistic that they deserve it themselves, that everything should be handed to them, that they do not have to work for money anymore. And I guess we could blame the technical era for all of this as well. Nowadays, it's very easy to just go on your phone, your laptop, connect to the internet, and there is normally a way to make money. And I've always found that once I actually became interested in computers from a young age, and I'm obsessed with the internet and the Internet of Things essentially, and e-commerce and all of this stuff, I realized that the money these days, it comes faster. You may have to work hard for it, but it's not necessarily labor like our parents used to do and our ancestors used to do. We're in the digital era now where at the click of a finger, money can be made. And trading is a good example. There's been days where I've seen, several 4 to 5, 6 figure trades fluctuating up and down, and it hasn't even affected me mentally. And to think that money has been made. There's been days where I've made 6 figures off a single finger click, and it's scary to think that what our parents used to kill themselves for my dad to get to this country, for my grandparents to get to this country, for all of the people and family and friends that all of the migrants, all of these people that come here that have had to slave and work their way into society. And to think there's this new era of kids who just press a button and make millions. It's crazy to actually put that in perspective. And that can negatively affect you as well, because you're so obsessed with this new mindset, and whereas you've got the old school mindset conflicting, it can really detriment your overall outlook. So with millennials, they believe everything should be handed to them. They do not believe they have to work for stuff. And it's this whole vibe of instant gratification. They just want it there on a platter. They do not want to wait. They want overnight and instant riches. And the truth is, just how money can make you wealthy very fast, it also opens you up to temporary satisfaction. And that's why it's very dangerous for a lot of millennials to have money, because they're living off instant gratification and temporary satisfaction. And if you have that with a lot of capital, you're going to end up broke very quickly. So putting that into perspective as well, the whole fact is you need to be focused on a long-term horizon. When it comes to cashing out over a longer term period, you need to be looking at a decade. You're in a market right now that's in its infancy stage. It's so young. It's literally a newborn baby that can barely walk yet. And what's happening right now is it's finally learning to walk. It's finally learning to crawl. It's finally starting to have teachers now. It's going to school slowly but surely. It's slowly but surely getting there, and it's going to graduate very soon. And then it's going to start high school or secondary school, wherever you are in the world. It's going to start progressing its way through the ranks. And essentially your newborn is going to go through this whole system of regulation and the conveyor belt of essentially a rat race. If we compared it to the rat race, it's starting from a newborn, going through the educational system, and eventually it's going to graduate into the open world. And essentially crypto is going from newborn, it's going through the regulatory approvals, through the educational system of governments and regulation, and eventually it will also be open to the free world, where eventually cryptocurrency will become a crucial part of our society and global infrastructure. So the same way we're thrown out into the real world to go and get a job, crypto will be projected into the real world to go and infrastructure and incorporate its way into society. That's how I viewed it. So when I understand this, I understand we are in the very, very young stages. I do not even have a real investment timeline. I do not care. I do not even have a real certain numbering goal. I'm only going to really sell when I am happy, when the market shows this. And this is why understanding charting and fundamentals and the overall structure of price action is so crucial, because the price action tells everything. The same way we've caught reversals from $20,000, $14,000, the same way we caught Bitcoin break through $6,000. We've done this through charting, and that's why charting is so powerful, because it can massively help you actually attain an exit strategy as well. So when it comes to this investment, the biggest failure that many people make when it comes to cashing out is they want a certain number in their head. Now, guys, we all want to become millionaires. We all want to become billionaires. We all want to become trillionaires. But the first goal to actually having a clear and concise exit strategy and a cashing out strategy is understanding your own current balance, your own current account size. What is going on in your current life? Do you have many overheads? What is realistic to you? And how much do you have invested in the market? For a good example is you always have to be realistic. Now, as much as I'm optimistic of XRP in the future, as much as I'm optimistic of crypto as a whole, it does not mean I'm going to hold XRP and, let's just say I have 100,000 XRP. Let's just throw that number out there. We'll just say 100,000 for scenario's sake. Let's just say I want to sell my 100,000 XRP, but I do not want to sell until it hits $500 to $1,000, because that's the number I want in my head. Now, guys, we have to be a bit realistic with ourselves here. Now, whilst this could very well happen in the near future, and this is something I'll also say as well, if you've read on CryptoWZRD.com, the free downloadable content for the market cap myth, many people said Bitcoin would never go over $1. Many people said it would never go over $10 or $100 or $1,000. And here we are seeing $20,000 and now $8,000. We've seen it all. When it comes to logic, when it comes to theory, when it comes to all of these fundamentals like market cap and stuff, they're only really measurable when it comes to stocks or Forex, stocks in particular, to be honest with you. When it comes to actual shares in a physical company that has bottom line profits, they're showing absolutely everything. We are not investing in the company themselves. We are not buying shares of a company. We are buying cryptocurrencies, which are essentially an additional asset or token or instrument which these companies and projects are using to achieve their goals. You're not investing within the company themselves and the shares themselves technically. And this is something I have to throw out there. You do not own shares of the company. You own essentially a token that company has produced. And this is why actually a good point to mention here, just to throw out whilst I'm on this topic, is this is why you should not get too fixated that much on cryptos, because you need to actually work out if you're investing in a cryptocurrency of any means necessary. I'll just throw one out there. Let's just use XRP as a good example. The first question that should come to your head is, does this crypto actually help the company achieve their goal? If the company can operate fully well without it. Do you need this crypto? Will this company just ditch this crypto one day? Now, a good example, everyone says XRP, everyone says Ripple does not need XRP to succeed. But the truth is, Ripple would never fully achieve their goal if XRP does not work and is not adopted on a mass worldwide scale. And I understand this, and I've done enough research to know this, and that's why no matter what happens, I'm not even placing the bet on Ripple, because I know if Ripple want to achieve their dreams and the goals and the visions that they've thrown out there to the public and the goal they're working towards, I know they cannot do that without XRP succeeding. So it's a no-brainer to take the risk of investing in XRP. But let's just say there's a random project that, they do farming, but they do their data on they do their data tracking on the blockchain. They've got smart contracts on the Ethereum blockchain, and they're just sending files back and forth. Everything's retrieved. That's all good and grand. But if they can continue farming without that cryptocurrency database and without the need for an ecosystem like they've done before, then the truth is the coin isn't really that necessary. But when you're looking at something that, and again, is that coin that the project's using, the coin has to be used globally. The coin has to actually be used and utilized by the human race, by the global population of human beings. They need to be using that token. If that token's only simply really used for in-house means of that project, then guess what? It's not really going to be worth that much in the future if only one company is using it. It's the same as JPM coin, the JP Morgan coin, again, as a good example. Is it going to take over crypto? Is it going to wipe out everyone else? Well, no, not really, because it's only going to be used for JP Morgan. Because why on earth would Barclays or HSBC or Halifax or NatWest or whoever, or Santander, why would they go and use JP Morgan's coin when they would just go and use their own? You wouldn't use a competitor's coin. So when you put that into perspective, it's not going to affect other competing cryptos in the market either. So having this understanding and having this long-term horizon and understanding of what can be coming on from the future, I can comfortably know that I do not need to actually have a certain number in mind. The goal here isn't to hit a certain figure. If it is to hit a certain figure, it has to be realistic, and you have to be real with yourselves. If you want to become a millionaire, but it means you have to wait for $300,000 BTC to actually become a millionaire, is it really worth taking that gamble of losing the money that you have now? If it means you have to wait for $1,000 XRP to make $100,000, you do not want to be achieving or thinking of that dream of $100,000. And this is where things go wrong. It's actually much more sensible to be taking profit along the way. The same way I dollar cost average my investments and show you how to do this, I dollar cost average my withdrawals and profit taking as well. And this is the beauty of the volatility in the cryptocurrency market. If there's one thing you've probably realized, the crypto market is so volatile right now that it provides an abundance of opportunities, and this is how I've managed to make the majority of my money. I sold a huge amount at $20,000 during the all-time highs. I even started selling on the way down during 2018 just to take some profits out because I knew price would probably fall a bit lower. And then guess what? When we started falling to $3,000 and we broke below $6,000, I kept on buying more because I was taking the profits from the top and reinvesting it. A good example was ZRX. When I first bought the Range Rover Velar, I showed you guys that on Instagram. ZRX, I gave that call. I can't remember the price, but it jumped around 360% from the exact day I gave that call. I took the profits off the table, even though I know ZRX is going to be, alongside XRP, one of the biggest investments in the future and arguably some of the biggest drivers for the altcoin rally. I still took profits off those investments, knowing they're going to be whatever they will be in the future, because you do not want to be waiting that long. I did not even need the money, but I still understood that if I take some profits off the table now, or even my initial investment back, and this is something you need to understand, your goal before you even worry about taking profits should be to get your initial investment back. And this is the most crucial part of investing. Once you've made enough of a profit to take out your initial investment and then have whatever's left running, you have succeeded as an investor. The same way if you invest into a business and you put 50,000 or 100,000 in, you haven't really turned over a profit or technically being considered successful until you've made your money back. And only once you've made your money back and you start generating and turning over a profit are you technically considered a successful business. Because Netflix is a great example. I consider them successful in a sense that they are known globally, but Netflix, I do not think they've actually even turned over a profit yet. And if I have a little look, and I'll just Google this quickly, I'll see if they've actually made a profit right now, because to the best of my knowledge, the operating income is around 1.6 billion. They have a revenue of around 15.8 billion, but I still believe they do not actually profit. And to the best of my knowledge, I think it was this year in particular, they were not even generating a single profit because they're spending so much money on, and to be honest with you, Netflix right now are absolutely killing it. There's some crazy shows on there. I'm obsessed with Power. Again, the Breaking Bad movies come out. They are going full blast. The Bill Gates series, I still haven't seen that properly. They've even got the full South Park series on there now, which I haven't seen in years. So Netflix are really going in for it. But are they technically considered successful when they're generating and they have an operating income of 1.6 billion in 2018, but they're not really turning over that much? So the question is, how successful is that business right now? And that's just a good example. I do not know the numbers, to be honest with you, off my head, but I do know with the amount of assets and equity in that company, the generating profit isn't necessarily going too well. And it's the same as Tesla. Tesla, in my eyes, is an incredibly successful business for what Elon Musk is doing for the world. I'm absolutely obsessed with that man's vision. I'm obsessed with the things he does, the way he does it, and he's just crazy. He's definitely a cyborg. He is achieving great things for the world. But is it a successful business in terms of profitability? Well, not really, because he almost went bust. So he clearly hasn't got his initial investment back just yet. So you can actually transition that straight over to crypto, and the same applies. Now, let's use the current price points as a good example. And let's just say, theoretically, you do have $100,000. And again, we can use a theory of $1,000 as well to make this convenient. So let's actually stick to $1,000, was a bit more realistic. Now, the first thing I would be doing, even if I bought right now XRP at 28 cents, let's just say we see and we know price has gone to $3.3. Your investment strategy should be to slowly start drip feeding. So I put in $1,000 at 28 cents. Now, we know we need to at least see, ideally, personally, I would like to see around 60 cents to make a nice over 100% return. And from there, I can consider taking out my investment. So the first thing I would do after making my first 100% in the cryptocurrency market, I would actually take out around 10 to 30% of my initial investment. The reason being is the way this should be working, first of all, is you shouldn't be putting a lump sum into the market and just stopping. So to understand the cash out strategy, you need to understand the investment strategy. I would be dollar cost averaging as much as possible. So I do not have a set figure of where I invested in one price. I would much rather put in $10,000 across, or £10,000 across a variety of low prices, instead of putting in £10,000 or dollars once and then watching it decline 50% straight away. That's quite depressing, and to be honest with you, not something I really want to go down. So if I was dollar cost averaging in the beginning around 28 cents and I've made my first 100% in the market, obviously you could be the person that takes out their initial investment and lets the rest ride, but you're not maximizing your profits that way. So what I would be doing is, whilst dollar cost averaging, let's say on the way up to 60 cents, even though I know I'm going to be taking some profit, I'm still buying. So I'm still accumulating below my initial take profit region. And this way, from a longer term perspective, I understand that XRP has seen $3.3 before. I understand in the near future, we have $5, $10, $15, $20, and I do believe XRP will one day be worth $100 plus. But this could be a very long term in the future. And this means that whatever we're doing for the short term is where the profit taking and anything that's essential or enough to keep you going, or a little reward, should be captured. This means for every few 100% you make, which is fairly easy in the cryptocurrency market, anywhere between all-time highs. Now, once we hit all-time highs, that will be the next place I take some profits off the table. That's where I'll start taking out 20%. Because you've hit all-time highs. It's not about being greedy. I've just turned an investment from, let's just say, 28 cents, and I've ridden that all the way. We've literally jumped onto that rocket ship, and I've gone all the way to $3.3. What's the first thing I do? Do I think, well, guess what? We'll go to $6 next. Why not just hold it all? That's not the way you do it. So you get to all-time highs, or you get halfway to all-time highs, you take a little bit of profit off the table. It doesn't even need to be your initial investment. It can be enough to reward yourself. And this is one of the most important aspects of investments. You need to treat yourself. The same way I say with trading, to make sure you withdraw and go and treat yourself and go shopping or go and spend it on a holiday, the same goes for your profits. Go and pay your bills, go and pay your debts, go on a holiday, go and treat yourself. You need to feel some form of satisfaction, some form of reward for your hard work and patience in the market. And if you have the psychological I guess you could say, benefit of taking profits and treating yourself, you're more inclined to actually hold on longer and let the rest of your investments ride. Whereas if you're just holding it all there 24/7, you may eventually need the money and you're going to have to take it out at a point in time where it's not needed. Let's just say the market's fallen 70%. Let's just say XRP was back at 20 cents like it was earlier, and you had all of the money in at $3.3, which you didn't take. Let's say the market's fallen back to all-time lows, and now suddenly your life situation has changed. You need the money, you've got bills coming, you've got a lawsuit, there's all kinds of crazy things going on. You need the money desperately. You've now had to take your money out at all-time lows when you initially had the opportunity to do so at all-time highs, but your greed consumed you and took over. This is not how you should be doing it. You should be much more fixated on taking profits when it's actually profitable. That sounds crazy, but you should be taking profits when it's actually profitable to do so. Now, let's go back to that theory. My first amount would be treating myself. It does not need to be a certain amount. It needs to be an amount that makes you happy. And for me, when we get back to all-time highs, 10 to 30%, to be honest with you, it's a pretty good number, because from there, I may throw in a few extra dollar cost averages around all-time highs just for the sake of it, because I know what the long term will hold. But especially when it comes to these regions, this is why at the current prices we're at, I suggest buying as much as possible, because it's the most it's just profitable. It makes sense. You're buying essentially at a 70 to 90% discount on the majority of these altcoins. So it's in your best interest to be buying now, because when this starts getting higher, you want to be looking long term. You want to be looking bigger. Now, when you start taking out 50 to, let's just say, the final portions of your holdings, let's just say the first takeout is around 20% at all-time highs. You've taken a profit, you've made a solid return on investment, you've now made your money back as well, hopefully. If you're taking 20% off the table after a move like that from 28 cents to all-time highs, you've probably made your initial investment back, or at least you're close to getting your initial investment back. So now, the same way I put stop losses into profit or into break even for a risk-free trade, you now have a risk-free investment. The only risk is you lose the money that is technically unrealized, and this is the difference. You have realized profits and you have unrealized profits. Unrealized profits are not real. They do not count. They are fake. Until they are in your bank account, or they are back into fiat or a stable coin if you really wish, which I do not recommend, then you only have unrealized gains and you do not technically have the money. The same way I could say I had technically 7 million during the 2017 bull run, maybe even more. It wasn't really that real unless it was put in or taken into my bank account. So when you put all of that into perspective, you realize that you need to actually be taking some profits off the table and securing those real life gains and turn them into realized profits. One of your second goals should be turning unrealized profits into realized profits. So from all-time highs, I've taken 20% and now my initial investment is back. XRP then pulls all the way back from $3.3 back to $1.5. What do I do in that situation? You then have the opportunity to either reinvest some of the capital you've taken out, and you can then increase your holdings, because if you put that all back in, you've technically increased your holdings massively. Or you put a little bit more back in, then you can redo the same move over again. Every time the market pulls back from a high, it will correct and start progressing higher when the next bull run comes. So understanding how to manage and run and control a bull run movement, you can continuously profit again and again, and it's almost too easy to be true. So the first thing I do with that 20% that I've taken out, I would spend 10% of it or put it towards bills or something. I wouldn't just save it. I would treat myself and reward myself for holding on for that long. We see a pullback. I either invest a little bit that I've got on the side, or I leave it all together and just let the market go higher. Now, suddenly you've gone from $3.3 up to $5 to $10. This is where you have to start being a bit more considerate and realize that the going has got good. You've been heavily invested in this for a long time, but you do not want a significant portion still remaining in the market until regulation is there. And this is a crucial factor in actually taking profits. Until regulation has actually kicked in properly, then you should not be focusing too long term on holding everything in the portfolio. Once the market is regulated and the liquidity is increased, then you can actually start focusing on leaving more capital in the market. But right now, during the speculative phases, you want to be treating yourself and taking very small portions of profit along the way. Now, let's just say regulation is there. The market starts maturing. We're 5 years down the line, and on the way to from $3.3, we've slowly started progressing over 5 years to $50 XRP. Now, along that journey, every $10, what I would be doing is just taking a small portion of profits. Again, it doesn't need to be a certain percentage. It doesn't need to be a certain amount. It needs to be what's suitable for you. Your investments and profit taking should be relevant to your lifestyle. If you now suddenly have enough money to buy a Lamborghini and you've still got 4 times that Lamborghini money over, then by all means go and do it. If you can afford it, go and do it. Go and treat yourself. The same way I bought the McLaren, I had the money many times over. I didn't upgrade to the 600 LT from the 570S until I had the necessary funding. It's all about relevance and affordability. So pushing that forward and pushing that higher. Let's say we're now at $100 in the near future. Let's just say you start seeing BTC at $50,000 to $100,000. You start seeing XRP at $100. Let's say all of this happens in 5 to 10 years time. When you're around these levels, this is where you want to start diversifying. What you would be doing from that point onwards, you would have made so much money and it would have been such a substantial amount. Even if it's not millions, it will be substantial in comparison to the situation you were in 5 to 10 years ago. Now, what that means is you can actually take out around 70. So in 5 years time, I plan to take out around 60 to 70% of my overall holdings, maybe even in 10 years time. I'm going to be leaving 30% in there. And then as the market starts maturing over time and gradually becomes more like the stock market, where we see longer bull runs extending over a longer period of time, but much more steady and organic growth, that's when you start reinvesting back into the market. You start taking profits out. At the end of the day, it's not about having unrealized wealth. It's about having realized profits and real world wealth and liquid capital that you can utilize. Now, let's just say the theory comes true, that actually in the future, cryptos will become a staple part of our society. We will be seeing digital currencies become a part of our monetary system. Digital currencies will be used as forms of transactions and currencies in many different means of life. It could be in games, it could be on a platform online, it could even be on the Wizard platform. Eventually, cryptocurrencies could and very likely are going to become a staple part of currency in society. So when you understand this, you realize that if you've invested from the early stages, you've already got a head start. If we actually shift over to a digital society, digital assets are going to become far more valuable. And what you deemed in the original stages right now as something that's fairly valuable will become incredibly rare. You're essentially giving yourself a head start in life. So no matter what happens in the future, you will need to be holding some form of cryptocurrency within your portfolio. So you need to be thinking about that as well. And that's kind of the note I want to end this on, and understand that no matter what happens in this market, no matter what happens over a 10-year period or a 20-year period, you should always have a percentage of cryptocurrencies in your portfolio regardless. The aim of the game here is to have a crypto portfolio that grows over the years while still saturating profits from that investment slowly over time. What you will eventually realize is one day, in 5-10 years time, what was once maybe unrealistic for you could soon become a 6-7 figure dream. The goal here is to understand this in advance. Do not be afraid to get a notepad out. Start planning what you would do with your realistic investment. If you're only going for $10,000 or $5,000, plan with yourself what you would do with that capital. The goal is to never have your money in one single asset class, and that's the truth. The money that I have been using for cryptocurrency and the money I've been making from cryptocurrency, that's gone into all different sources and all different streams. The goal is reinvestment. The money you make after you've spent it on yourself the first time, on your first few profit takings, the rest should be reinvested. You have to balance out the yin and the yang. For every investment you take in profit, spend a bit of it on yourself and reinvest the rest. And that way you are not fixated or relying on one single industry. You're not relying on one asset class. You do not want all your wealth in crypto, but moving into the near future, you're going to want to be very well hedged in this market, because as we shift over to a digital and cashless society, things are going to get very interesting. If you are not holding cryptocurrency by then, you are going to be left very well behind.